Friday, 3:30 p.m., July 11th. We're going to blend a little final hour session. We have 30 minutes left before the close. Got a couple trades I'm watching, and I wanted to talk strategy session today, a little trading 101, all about some butterflies. We're going to talk about 3 different types of butterflies today. The standard butterfly, which shows a low risk, high reward and some symmetric plotting on the options chain, and then a broken wing and an open wing, which I thought was interesting because you can actually take it as a debit, but you can control the risk side a little bit better than a broken wing, which is a credit. So if this is all foreign to you, that's totally fine. Let's dive into the strategy set here in a little bit. A couple things to review just on the day. The markets have just been grinding all day. We gapped lower. We're still red on the day. We're still red on the week in the S&P. Here is a look at the week. So we opened lower. We are sitting right around that current level. So here's where we opened HTGC. I think that was a pinch point that just hit for profit. Pinch point HTGC. 66 debit took the 50% winner. That was 99 cents. Credit, nice little winner there, hitting auto profit. Equals 99. Nice little 50% winner there, taking the profit. Okay, so a little winner. I've got to update this for pinch point. Pinch point here. Trade management update. HTGC. Trade number 7. This was a buy 18 call, buy 17 put. It's a long strangle. 66 cents debit. Close. This is entry. Closed 99-cent credit. Hit 50% profit target. Boom shakalaka. Okay, so a little update there. That gives us now 9 winners in pinch point, 1 small loss. Model portfolio up almost $11,000. Not too shabby. Feels pretty good. We got some expirations coming up on the 18th, which is next Friday. We'll see if the markets get rocking and rolling. Let's talk today intraday levels. We've got a sticky point right around the 62.65. I'm kind of looking to see if price will kind of stay there for the day. Hopefully it will. I'd like to see price stay less than 62.75. Let me take a quick peek here. I might just close out some profit. I've got a bear call spread down about 20 bucks. I've got an iron fly that's up about 20 bucks. This one's a little bit more sensitive. I'm trying to get 50 bucks out of this one if I can. Before the close, I need price to stay pretty much right where it is. 65.65 is perfect. A little bit more time decay helps this split between 62.60, 62.70. Give me some profit. I'm looking to see if I can get this to pay me. Bear call spread, I need price to stay below 62.70. And I've got a pending order to close this thing with a 10-cent debit. It's trading right here for about a dollar. So it's down about 30 bucks. Okay, I wanted to May's coming in. Yens, currencies, sure. I mean, we can take a quick peek. All I'm going to do is look at the currency strength chart. Look, it's Friday. Markets didn't really go a lot of places. Japanese yen weak, pound is weak. I still think the pound yen is a bit of a grind higher. A lot of the yen crosses, I think, are still, not really postured for a big move. I mean, Aussie yen is up. CAD yen is up. Swiss yen is still up. Euro yen is up. I mean, if you're short-term trading, the yen pairs have been weaker. The cross pairs have been better. New Zealand yen up. Dollar yen is the one that I said the dollar is probably going to catch a bid. It has. We've seen the dollar rip from about 143, just below 143, all the way up towards 147.50. So again, watch your structure. Good trend line behavior. Just good support. Good bounce here. Maybe this is kind of a channel that the dollar yen can play around in. So there's room to get to 148, 149, 150 perhaps. Today, really, I think the big story for today is overnight we had fresh highs, like meaningful highs on Bitcoin. Bitcoin has had a nice 3-day run, broke the all-time highs at 112,000. We poked it here around 112,040, and yesterday's close we surged higher, and then today we're having some follow through 117,922 with highs up to the 118, almost 119 handle. So today's high 118,839, a nice little convincing breakout on Bitcoin. Again, great. I mean, part of the reason I hit fresh highs on the year, up to 360K for the portfolio, that is because of Bitcoin, silver, and gold. They've all had a good day. It's nice to see that considering the markets have been sideways this week. We literally opened here and we're closing here. Percentage wise from this close last week, market was down about 1.2%. Market came up and poked all-time highs. Market is pretty much settled in even for the week. Now it's down because of this gap. It's down about 0.2% for the week so far, and hopefully it just stays here right around 62, 65. That would be nice for this trade right here to hopefully show a few more bucks. I actually might try to go a little bit further out if I can. Let's go to 11.35 and try to grab 100 bucks out of this trade. Let's do this one here. 11. I'm going to try to get 11.35. If it's going to just hang out around 62, 66. Actually, you know what? Let's replace this one. I'll go 50 bucks in this trade. 11.85. Try to grab a quick 50 bucks. All right, so I'll let that one marinate. If that closes out good, one less thing to worry about. And then line in the sand for my bear call spread is 62.70, which hopefully will still pay. Let's have a look at the heat map. So just kind of looking at Bitcoin, that was the big story that I saw, last 3 days, starting to get to all-time highs, really making an impressive surge above all-time highs. Is this like game on Bitcoin trading? I don't know. I mean, I'm still a little cautious. If the stock market turns for a correction, I'm pretty sure Bitcoin's going to turn as well. The one thing that'd be a bit of a fake out would be a run up in Bitcoin, and then we pull back and sweep these lows, and then we have a bit of a topping pattern. Maybe it comes back down. I would hate to see that pattern, actually. I'd hate to see that move. Reason why would be if we go this type of move and we come back down, maybe this just leads to more support, but it's a chance to buy low and then get back up to the highs again. But if we just simply break out and run, pull back and find resistance to become support, this trend continues. And I don't know if we're going to see anything go a little bit more explosive on Bitcoin. Yes, no, maybe so. Time will tell. But I'm certainly glad that I have a chunk in the portfolio, and it is one of the assets that continues to do pretty well. Year to date on Bitcoin, let's go to the monthly time frame here. Go back to January. I want to say Bitcoin's up maybe 20+%. So it is outpacing the S&P. It is outpacing the Nasdaq right now. Year to date, here is January. So we opened up Bitcoin for the year. Pullback was about 20%. Interestingly enough, peak to trough was a little bit steeper. We had like a 30% peak to trough on Bitcoin. But considering the vol, I mean, S&P had 20% pullbacks, Nasdaq had 25% pullbacks from highs to lows, and Bitcoin maybe 30%. I mean, I think a lot of traders would have been feeling, okay, the Nasdaq's down 25%, Bitcoin's got to be down 40, 50, 60%. This was about a 32% pullback from high to low. So again, where we started the year on Bitcoin, which is right here around 93,000, it is currently up around 26.5% for the year. Not too bad. If you look at gold for the year started out in January 2025. Gold is one of the better performing assets. We had performance up to about 33%. Pullback in consolidation here. It's still up about 28% year to date. Again, not a bad run for gold. Silver's had a good run these last couple weeks. Really nice candle today on the month, breaking above some fresh all-time high, or not all-time highs, but fresh highs here on silver. Started out the year. Let's go back to January. Silver making a heck of a run, barely pulling back, even though we had that pullback in April. I mean, silver from the start of the year was only down about 2%. Silver's actually up right now, 33% for the year. Silver is outperforming gold. Gold is up almost 30% for the year. Bitcoin's up 25, 26, 27% for the year. These are good things. This is why I've said I want to have these in my portfolio for the year. It's a good diversifier, right? This is kind of a play against the dollar. This is kind of a play against the U.S. bond market. This is kind of a play against printing money, which is what is happening. And I'm curious if something's going to break in the markets this year. The break, I see it happening in the dollar or the U.S. bond market. And it doesn't mean like breaking permanently. It means a break, a snap, a nasty move, lots of casualties, ruthless market conditions before something has to get fixed, right? And nobody knows. So anyway, we'll see how that plays out. I'm close to that $50 handle right here. Iron flies up about 50 bucks. And my bear call spread is looking a little bit better as well. So I'm going to try to hit both of these out for some quick wins. This one's good for another $76. This one's good, hopefully, for 50 bucks real quick here in the next maybe few minutes. Price is cooperating. That's a good thing. Give me my $50, please. All right. If that one gets hit, great. And I'll keep an eye on this one for, I don't know, if I can close this for maybe to just get rid of the risk today, maybe 35 cents. Right now it's trading for about 60 cents or so. Here is my closing debit. Here's my closing debit. These are both getting close to hitting my profit target. So I'll keep an eye on these. Dean, how'd you do today? Held all day. Okay, gotcha. Gotcha. You held the Iron Condor all day. Interesting. Gotcha. Oh, you got the 100 bucks there. Very nice. Silver's doing great. Yeah, silver is doing great. So I just want to show, I mean, the reason I'm at highs today for the portfolio, it's been a lot of that exposure. So CEF is a gold and silver play right here. It's currently up around $5,300. GLD, of course, I haven't really added to GLD positions. I've added more in SLV, but GLD up $21,000. IBIT is my Bitcoin exposure, up around $73,000. And PHYS is another gold and silver combo. That is up around $4,000, $4,400. And then my SLV position is up around $46,000. So, I mean, collectively, yes, there's some profits running, but I still have profit targets that are higher. I'm still letting these profits run. There will be a point in time that I want to maybe dial back some of the percentages and take some profits, but I think we're possibly just getting started. I mean, honestly, from silver, I've been a very patient silver trader for a while. I think if silver ends up making a run to 40 plus, I think the next stop is all-time highs. I mean, obviously there could be pullbacks and pauses along the way, but my target on SLV is going to be $48. And so there's still another good chunk of profit to the upside. There's another $10 there, which is around another 25%. So silver to me, even though it's a boring, poor man's gold, it does have a good upside look. Okay. All right, good stuff. Checking just these SPX positions before we go to the close. Bear call spread. I'm really close in this iron fly. Come on, man. Give me my fill. 45 bucks. I'm seeing it's right there at my 11.85 is my debit, trading at 11.95. All right. I want price to stay right in between 62.60 and 62.70. 62.65 is kind of ideal. So if we make a little run to 60 or 62.65, this should hit that 50% or that $50 profit target. Come on, baby. And then once I score these trades up and get them closed, I mean, right now it's up 45 bucks, 26 bucks. Try to grab. There we go. Just made 50 bucks in the iron fly. I can close out here for another 20. That gives me 70 and 30 on the day. Like, it adds up pretty nicely. I'm going to see if we just stay below 62.70 for the next 15 minutes. I think that we will. So I do have a debit here at 10 cents. I'm just going to go ahead and get rid of this and see if I can just close out for the full 76 cents. I don't know how they got. I mean, I guess it was a split trade, but it should be like 75 cents cash settled, and see if I can just keep it. So that would give me on the day for daily profit play 50 and 35 and 75, about 160 bucks on daily profit play trades today. But I need to see it stay below 62.70 just to be safe, just to be smart. Probably just take this off the table. So in for, and we go. Let's see, 55. I'm gonna go 45 right here. I'm just gonna trap it. 30 bucks. There we go. Fill for 45. Okay, so I took a win. I'm gonna go ahead and update this for daily profit play. DPP update. The bear call spread. That was the 62.70 sell call by 62.75 buy call. Entry was 76 cents credit. Close for 45 cents debit. Keeping 30 cents per contract. Days total plus 35 plus 30 plus 50. So what is that? 115, 115 per contract on the day. Keeping the credit. How many trades daily? I've got 11 trades today. I mean, it varies. I mean, some days are ridiculously active where I literally take 40, 50, 60 trades. But, I also have a lot of accounts to look after and prune. So today, actually, I take that back. Today was six trades today, and it was all just in my active day trading account. So uh, client accounts didn't get touched. I've got expirations out to the end of July, expirations out to August 1st. A couple of rolls here and there, looking at just letting profits run. Gold, silver, Bitcoin made a nice little surge. I've got some hedges. So anyway, all right. I'm good for day trades. I'll go ahead and delete this one, get some of this buying power back. Off we go. Good. Okay. Now let's talk strategy. Um, So I think this will be pretty straightforward as far as building butterflies. What I'm going to do is kind of decode the butterfly spread, talk through three different styles. And the reason I like these trades is because we can trade the market up, down, sideways. The butterfly spread always gives us a potential profit trap. It's a great strategy for a week trade, like WEEK, like 1 week or so. And it's a great trade for 0 and 1 day expiration trades. So it's a very short term trade that works well, especially if you're trying to get the profit trap opportunity. There's a couple ways to trade it, and I'll give you the strategies that I like to do. The services that I run, if you're interested in taking some of these trades with me, um, I run some of these butterfly spreads. I combine this strategy in with a couple of my services. News breakers, we have some butterfly spreads that will go in. Double up alerts, we take some butterfly spreads during the day. Daily profit play, we've taken butterfly spreads during the day. Project options edge will take some butterfly spreads during those swing trades. So some of it's short term, some of it's medium term, some of it's longer term. I had a trade running on Spotify, for example, on Project Options Edge. I did a broken wing butterfly on the upside, broken wing butterfly on the call on the put side or the downside, and ended up taking a loss on the trade. But it saved me. I want to say I saved myself close to maybe $1,500 in risk. So I took a small loss on the call side was threatened. Like Spotify, I wanted it to stay below like $700, and it was up to like 720, 730, and I ended up taking like a very small manageable loss. At less than 1% was the net loss. Daily profit play, when we're doing a lot of 0 day expirations, works out very well to get some nice profit targets. Double up alerts, if I do a 0 or 1 day, a lot of times we get 100+% winners on double ups. News breakers, sometimes around earnings, I will trade butterflies for a defined risk trade around the expected moves. So again, if this is all foreign to you, it's okay. That's why we're doing this strategy session. Fair? Okay, so I'm just going to use my charts, kind of use the white space on the charts to walk through this stuff. Feel free to ask a bunch of questions. I'll try to check the chat as we're going along. This whole session, by the way, is being recorded, right? So this can serve as like a strategy session, like a trading 101 strategy session in my YouTube channel. If anybody wants this, you can see it archived in my YouTube channel. There's two places here: YouTube.com/Chris Pulver and YouTube.com/Financial Wars. Hopefully this helps. All right, so let's talk first. There's going to be three types of butterflies I'm going to talk about today. The first one will be the standard butterfly spread. Okay, and what I want to accomplish today is I want you to understand what the trade looks like in an options chain, what it looks like from a risk reward standpoint, and then how do we actually apply the trade in the markets. So we have a standard butterfly spread, and then we have a broken wing butterfly, which again, these names are silly, but I will explain each one and why I like them and why I use them. And then also we have an open wing butterfly. Okay, so the standard butterfly spread, the reason I like this one is this is typically the, go text box here, so low risk, high reward. That is the best thing. Okay, these are very inexpensive to trade. So for example, my double up alerts, we take a lot of trades for 20, 30 cents, 30, 50 cents, maybe, somewhere between, let's just say 20 cents debit to $1 with the potential to double or triple, or sometimes more. I've taken trades that have cost me less than 50 cents or $50 a contract and had it pay over $3, $4, $5 per contract. Like literally, we're talking like 5 to 10x return on some of these trades. You can't get that type of asymmetry or risk reward in any other strategy and options with the short-term expirations like you can see with butterfly spreads. So the way this looks on a profit graph would be something like this. So you have a your flat line here is going to be your risk, and you have a asymmetrical trade. So basically, if price, this is going to be a break-even point. So you have a break-even point here, break-even point here, and you have risk. I'll put this in red, make this a little bit smaller. Hopefully you can see this on the chart. So you have risk if price is too high, you have risk if price is too low. Okay, so you have risk on the left if price is too low. This is, price is on the left side, meaning price is going down. Price on the right side is price is going up. That's the direction of the asset. And in the middle, you have your profit. So in the middle, this would be your, I'll put dollar signs here like a big profit trap. Okay, make this a little bigger. There. All right, type in a wire yes if that makes sense. So the way this trade works for me is if I see for the day, let's say price is trading, we'll just use like the SPY as an example. We'll keep the numbers simple. Let's say the SPY is trading at $600. Okay, SPY at $600. I believe price will rally for the day. Okay, and the expected move is maybe a plus or minus, $3. So what I can do on the SPY trade is I can do this. This is the butterfly spread. I would buy a 602 call and I would sell a 603 call with 2 contracts, and I would buy a 604 with 1 contract. Now that trade might cost me 30 cents debit. Okay, because I'm basically trading an out of the money move, but if price is going to move towards my desired strike price, which is the 603, that's the middle. So let's put this in as an example. So my 602 would be here. My 602 on the risk graph is right here. My 603 is going to be the pin price in the middle. And my 604 is going to be my break even over here. Okay. So in a short-term trade, the way this trade pays me is, let's say we're trading down here. Remember the assets at 600. Okay. Everyone follow my doodles? So if we're trading here at 600 and we go to 60.50, 601, 601.50, 602. Well, if price is moving intraday up, all of those option values, all of the deltas are changing. All of the option prices are changing, right? The value is increasing. So my 30-cent debit is gaining in value. This trade probably has a chance to start off with, I would say, close to like a 9-to-1 reward to risk. So I'm risking $30 on the trade. If it's a 30-cent debit, I'm risking $30 if price goes too high. I'm risking $30 if price goes too low. But the best part is that's the most I can risk on the trade. The best part is this trade might offer me, if I'm going a dollar wide, it might offer me, I'm thinking, oh fudge, I don't know. I guess this is a little bit less than 9-to-1. That'd be like an SPX trade. This would be offering me probably like more like a 3-to-1, because I get $100 max on the trade. Actually, that's not right. Probably get closer to 4-to-1, because I should be able to pull like a profit of $2 out of this trade. So my max profit is going to be somewhere around $1.70, because I get $1 for this spread, $1 for this spread, and I make $1 here, make $1 here. That's what gives me $200 max profit. 170 would be my, I guess I'll put $200 here. That'd be my pin price. Okay. So the nice part is I get about a 6.5-to-1 potential trade setup. Now I'm not necessarily trying to get 6-to-1 in the trade. So let me change this to 6. Oh my gosh, that's huge. 6-to-1. We'll put a line in this. Sorry, I'm just as we go. We'll go 6-to-1 reward to risk. 6-to-1 reward to risk. And that's potential. Doesn't mean it's guaranteed, right? The only way you're going to get the full max profit is if at the end of the day or the expiration of that trade, you are sitting exactly at 603. And that is very difficult to achieve. So the reason I like this trade is if I take a trade like the price is at 600 on the underlying, like the SPY, I think price is going to go up for the day. So I put on a butterfly spread. It's a small debit of 30 cents with the potential to pay me $2 max credit. So you have $2 max credit if it's perfectly spot on at 603. But the nice thing is 30 cents can become 60 cents pretty easily. 30 cents can become 75 cents pretty easily, right? 30 cents can become 80, 90 cents pretty easily. It doesn't have to be perfect. It doesn't have to go all the way to max out at the end of the day. But if I can turn 30 cents into 60, into 80, into 90, that's 100+% return on that trade, right? So if I want to throw 3 contracts at it, max risk of $90, I can risk $90 to potentially clear, 90, 120, 150, and not have to sit and wait and hope that I can make like $600. I can still make, more than double my risk, which is the point. It's a high reward to risk setup. It gives you an opportunity to grow into an amazing profit, but realistically, if it just stays, within you get the direction somewhat right, and it starts to climb up into this profit trap, a 30-cent debit is very cheap. You can turn that into 60, 70, 80 cents intraday without having to hold this thing all the way to close. Okay, so this is what it looks like on an options graph. If I put this up here for option strat, let's build one on SPY just as an example. I'm going to do we're using an example like we're going long, so a long call fly. Underlying assets are on 624. So if I did a one wide, 24 to 25, there you go. So that's typically what a butterfly spread looks like. You have your small risk on the left if price is too low. You have your small risk on the right if price is too high. And then right in the middle is your profit trap. What happens during expiration is a butterfly spread can sit for the entire day. And if price is cooperating, you can see that you start to get the profit ramping up through the later portion of the day, right? Here is a trade. This would be a trade. Let's go to today, actually. Here's a trade for today. This is now, like we're almost max profit here, but I guess I'll go to Monday. Let's say we take a trade for Monday and we take a trade that's right around center price. Let me shift this over a little bit. What's this center price? 624. Okay, this is about equidistant. All right, this is pretty good for like a trade on Monday. So if I put this trade on, I would buy the 622 call for one contract, sell the 624 for 2 contracts, buy the 626. You can see that I've got $2 different between the 622 and 624 and another $2 different. So it's the same gapping. It's equidistant gapping in strikes, right? So $2 lower, $2 higher from my pin price, which is the one in the middle. Now, the way this works for profit is this is going to have to sit and go through the whole weekend, which obviously there's no markets open over the weekend. But let's say we come into Monday morning, which is here, Monday morning at 9 a.m. Okay, we open up at 9:30. If this trade stays right around the open, what's kind of crazy about this trade is I can pay about $40 for this trade. And by the time the market opens on Monday, if it opens right where it closed today, give or take a couple of cents, I could almost have a 100% winner by the time the market opens on Monday. That's a pretty good trade. The risk, of course, is that we have a gap lower, gap higher on Monday, and all of a sudden this whole thing's out of whack. So that does make the trade difficult, and maybe we don't know what Monday's open is going to look like. But as the day unfolds, if you want to get this to full profit more times, so this is opening bell, okay, and then you look at 10:30, you look at 11:30, you look at 12:30, hour by hour by hour, this trade continues to gain potential profit. Now, where do you need price to be? You obviously need price to be falling somewhere in that profit trap to achieve the max credit. So this would be, $2 max credit minus the 40-cent debit. That's how you can grab $1.60 out of this one, or $160 versus a risk of 40 cents. So it's about a 4-to-1 max profit, which is still pretty darn good. And my goal for this trade would potentially be, let me see if I can make a 1-to-1. Can I turn $40 into $40 and I'd win? Okay. All right. Does that make sense? So let me go through another example, and I will be sharing a lot more of these examples. There's some big announcements coming in the next week or so. I'm revamping my morning sessions. So I want to be with a lot of traders every morning and not just in one specific service. So our daily profit play is going to become a daily profit room. And I'm still going to be doing exclusive alerts to my daily profit play members, but I want to be filling up the room so I can have sessions like this, answer questions like this, talk strategies like this, share my services and my sessions and my strategies. And I've got something for everybody. We have the ability to day trade indexes, swing trade indexes, look for individual stocks, high reward, low risk trades, earnings trades, insurance trades on our downside risk protection, and then obviously a lot of discretionary trades that I can sprinkle in for some of my other strategies. So I have a lot of services, and I take all of them really seriously because it's live capital all the time. But I want to make sure that I have an audience that understands, like, I'm not a one-trick pony. My approach to trading is whatever it takes. I don't care what I have to do to make money. I want to win. Period. Okay? All right. So anyway, any questions on the butterfly spread? When it's set up, you're going to have equidistant strikes. So you're going to have your risk on the left side of price is too low, risk on the right side of price is too high, and then the perfect little profit trap in the middle. Butterflies are best when you're at or near expiration. So that's why a lot of butterflies are in the markets now as a 0-day or a 1-day expiration. So you can start to get some of this profit trap sooner than later. It doesn't have to be perfect. But I also have seen traders that set a profit trap for the week. Here would be a good example. This would be the 18th. Let's go to July 18th. Let's build a butterfly spread here. This actually would transition nicely into my next trade. Let's go back to this chart here. Any questions on this chart? Any questions on this like strategy one, which would be like the butterfly? So if price is around, let's use the SPY example again, $600, I go up in price, I do an out of the money butterfly spread. And you can make this $1 wide, you can make this $2 wide. Obviously, the wider you go, you got a bigger profit trap. The wider you go, the more expensive the debit. In a 0-day environment, there's risk. But these are very, very inexpensive trades that offer typically, 5-to-1, 4-to-1, 6-to-1, 9-to-1, 10-to-1. And you don't have a lot of strategies, especially for short-term trading, that offer a high reward to risk setup. That's why they're great. But what do you need to be good at? You need to be finding direction. You need to be finding price is going to find a level through the day. And the way I like to trade butterflies personally is if I can get a sense of direction for the day, I'll set my butterfly. If I think price is going up to hit certain levels, I'll set my butterflies at those levels. If I think price is going down to hit certain levels, I'll set my butterflies at those levels. And if price is approaching those levels, I can typically turn that into a 1 to 200% winner. That's my plan. I usually don't hold these trades all the way to expiration because it's a lot of it's a very small bullseye. Like, imagine throwing at a dartboard with your eyes closed. That's kind of what it's like to try to pin a trade. You can have all the data that you want. You can have all the levels that you want. The market in the last 5, 10, 15 minutes can do all sorts of random stuff. Today we were trading around 65. Had I not managed the iron butterfly, I would have been down probably, I probably would have lost $50 on the trade, but it could have been a lot worse. I was risking up to like $750 on the trade, but I ended up grabbing $50 instead. I hope you're not referring to doing more trades in DPP. It's hard enough. It's not that, Carla. It's not. I mean, DPP is going to be very much the same, very standard. What I'm looking to do is have an audience where every day I can trade with more people looking for general direction in the markets, what's moving. And so we can talk indexes, talk levels, do our daily profit play, and then I can share and showcase some of the other strategies. Okay. Lee says on A1 live stream, yeah, so I mean, I'm still doing Pulver alerts with A1 Trading. My schedule's changing, so I'm going to be live less, but they're still going to have a lot of my content, and I'm still doing Pulver alerts with them. And then my services at Prosperity Pub, everything's in my Discord. So in my Discord channel, you can see here. Sorry, I've got a lot of chart nonsense. So here's education updates. Um, let me see if I can update this. Pinch point, options edge, newsbreakers, double ups. I'm going to put in here crash insurance masterclass. So pinch point plus alerts, VIP all access. We've got also the crash insurance masterclass. So daily profit lay, waterfall, double up, newsbreakers, options edge, pinch point, scanner plus a crash insurance. Yep. Okay, that's accurate. So yeah, this is the best place to find it. I will have a website and a place to go. So if anybody does have questions on any of these services, they're working on a website for me, chrispulvertrading.com, that has links and information on all these services. And also I'll have direct links as well that I can be sharing hopefully in the next week or two. Okay. So and the reason I have a Discord is because I want links all in one place. I want information all in one place. The reason I'm asking for chrispulvertrading.com to be built is because I want all my links and information in one place. That way, I'm out there doing trading battles. I'm in different sessions. I'm on YouTube. I'm all over the place, right? I'm still trading every single day. I'm essentially running live sessions all day long. There's a lot of ways for people to find me. But I want to make sure, like, if you'd like to trade with me, there's a way to do that. And I have one place to share all these links. Okay? All right. There's that. Let's go back to the chart. Any questions on this? Again, for Carla's question, this isn't about, bringing in any complex strategies to any one service. I'm just simply sharing, look, I like the strategy. It's just a strategy. If you never trade a butterfly spread, you're not going to hurt my feelings, right? But there are services that I run where we will take butterfly spreads. I've taken them a lot in double ups because this is the type of trade I use. Double ups, I use butterflies a lot. Newsbreakers, I can use butterflies quite a bit as well. Project Options Edge, it's my discretionary service, so I can use butterflies there too. Okay. All right. So this is a standard. Like I said, if I think price can go up to a certain level for the day, I usually set a butterfly spread that's all calls at that higher price. If I think price can go down for the day, I usually set a butterfly spread that's all puts for the day. And so it's a very cheap, inexpensive, out of the money call fly, or a very cheap, inexpensive put fly. And I'm basically trying to see if price can gravitate towards those levels, I can take profit. And I have trades in a certain day if I don't know what price is going to do, i.e., FOMC, non-farm payroll, some big news event. I don't know. But FOMC is a great day. For example, like July 30th, we might see this, is if I have a move up or down and FOMC is in the afternoon at 2 o'clock, a lot of that is I can set, let's say I take a debit for 50 cents and another debit for 50 cents. I play the call side and I play the put side. As long as I can close out a winner for $1.25, $1.50, $2, I can win one, lose one, and still walk away with like 50% net profit, 100% net profit. Those are great trades. So I can literally, plan an up or down move for the day, win, and just offset it where, hey, I washed. Like if you look at my double up service, some of those trades happen. I don't know what direction we're going to get. I'll play it both ways, and I close out for 150% winner, and then I take a loss on the other one. I still make 50% return on capital, on total capital. That's pretty good. And I don't have to be right directionally. I can just pick, like, go up or go down. I don't care. Give me a trade. That's kind of nice. So anyway, that's the standard butterfly spread. This is what the risk graph looks like. There's an example. Like I said, if price is going higher, or I think price is going higher, I set those call flies up. If I think price is going lower, I set the call or the put flies lower, and I just see if price can gravitate towards them. If we start the trade off with a 5-to-1 opportunity or a 10-to-1 max opportunity, to get to a 1-to-1 or a 2-to-1 is very possible intraday without waiting all the way to close. That's why I like the butterfly spread. Okay. And it's cheap. It's a cheap trade. It's very inexpensive. I don't risk a lot of these. I mean, if I take the trade, I'm usually risking like 50 to 100 bucks. But 50 to 100 bucks to make 50 to 100 bucks or make more than that, return on capital is really good. Okay. All right. I'm going to move on to the next one. The next one's going to be the broken wing butterfly. Okay. Broken wing butterfly is a little bit different. Okay. This one is for the broken wing. This is we'll say there's a skip strike, which what that means, the skip strike is it's not the same distance from the pin price. Okay. So for example, I like broken wing butterflies if I think price can go nowhere, maybe slightly lower or higher. Okay. Give the market a day to do that. Give the market a week to do that. What's the market likely going to do? Most of the time, okay, we have about a 54 to 56% bias that these markets find ways to go up for the week. Okay. And every day we find that most of the time the market's trying to carve out green for the day. Even if it gaps higher, it can carve out green for the day. Okay. So the way that that trade looks from a risk graph is you have your risk here. Okay. So you have your zero line, you have your risk, you have your profit trap, and you'd have your credit. Okay, that would be on the, you want price to stay above. Remember, this is the asset price going down. I'll put this like arrow down. So asset price going down or the asset price going up, this is how we make money. So as long as price stays sideways, maybe oscillates a little bit or goes up, you can get paid on this trade. Okay, so this is going to be the credit that you take in. So this is going to be the credit from the broken wing butterfly. This is going to be the trap at the end of expiration if it's right at the strike. And then you have the risk on the left-hand side if price falls too low, the risk. Okay? So why is this trade good? Because basically you're giving yourself the probability of price going sideways or up with a potential profit trap at expiration and some risk that you're comfortable with. Sometimes the risk is not great. Sometimes the risk is, hey, look, I'm going to make $1 on this trade and I'm going to risk $500 if I'm wrong. So that's backwards. But I give myself maybe a $1 credit here, which makes me $100 if I'm right. I'm risking $500 on the loss, but I also have a potential $500 profit trap that helps me offset, potentially the full risk, right? So it's manageable in the sense that I can make $1, I can make $2, $3, $4, $5 in a perfect trap, $4, $3, $2, $1 in this bonus trap. I can make within about a maybe 5, 10, 20 point area. I can trap profits for a bonus, giving my trade an extra, like kind of a lottery ticket type thing, right? But if price falls too far in this one, then there's my risk. The other side of this trade would be if we wanted to say, look, I think price shouldn't go any higher. So then you have your zero line here, and you have your risk, you have your profit trap, and you have your credit, like so. So if I did it this way, this would be all puts. If I did it this way, it's going to be all puts, okay, for the broken wing. If I did it this way, it's going to be all calls. Okay. And again, I mean, I don't want anybody to get caught like butterfly. This is crazy. This is such a hard strategy. All this really is a combination of a debit spread and a credit spread combined. That's all it is. And what you're doing with this trade is you're taking a wider credit spread that is going to give you this risk here, but it's wide enough to finance the trade and give you a net credit when you enter. So rather than paying a debit like you would do here on the standard butterfly, you can make it so you skip a strike or add a wider credit portion to the trade so you take in a net credit. Okay. So why do I use this strategy? Well, because I have a bit of a bias for the day. Hey, I think price is going to go higher. So I can set up a broken wing because price goes higher. I keep the credit. I can manage that credit for a portion. Like if I pulled in $1 and it's trading for 50 cents or 40 cents or 30 cents, I can close that trade out, take the winner. If I want to let the trade run for the day, I still have my credit. I still have a potential lottery trade, which is basically the big profit trap. And then I do have risk. If price goes down, I'm in trouble. Okay. Same thing is true on the call side. If I thought, hey, there's no way price can go higher than this, that's what I think. There's still risk in the trade. So I'd have my credit. If price went lower, I'd have my credit here. Okay. And then I have my profit trap. If I get it perfectly spot on with the pin price, difficult to do, especially at expiration. And then I have my risk if price goes too high. Okay. And all this is a small debit spread with a bigger credit spread. So small debit spread, big credit spread, and the bigger credit spread pays for the overall trade, which is why I can enter in at a net credit. So if I'm doing a broken wing butterfly, I am essentially calling the bottom or the top. I don't want price to go lower on this trade. Okay. This trade right here, I don't want price to go lower. So I'm essentially saying, look, I hope price stays above and goes higher for the day because that gives me my credit. If it pulled back a little bit, I have that potential profit trap. But if I get a credit that I can trade for a lesser debit, I still make money. On this trade, I don't want price to go any higher. If I take this trade, I don't want price to go higher. I essentially set my line in the sand and say, I don't want price to go higher than this. So I've got my pin price. I still have that bit of profit trap at the end of the day. But if price goes up above all my strikes, there's risk in the trade. Okay. So what's great about the broken wing? Well, you take in a credit. You can manage that part of the trade for a partial win, or you can hold it all day and see if you got the full win or the profit trap. What do I not like about the trade? It's a little bit more risk than it is reward. A lot of times when I take these trades, I can do a $5 profit trap, but I'm still risking about $900 in the trade. I don't love that because obviously I don't want to have tons of trades where my reward and risk is backwards. So if I'm taking a broken wing butterfly, I want to be pretty certain. I mean, as certain as I can be. I want to be pretty certain that I've got a direction for the day that price will obey. And if it does, I can make that a winner. Okay. But it's like a credit spread that has a built-in lottery trap. That's what it is. And it's just a combination of one debit spread that's smaller in width and a bigger credit spread, so it pays for the trade. That's what this is. Any questions on this? Any questions? Okay. The other one, an open wing, this one is pretty new to me over the last couple of months. I've been playing around with this one thinking, is there a way that I could use this trade? And there is. I haven't really used it that much because I'd rather pull in credit. But what I like about the open wing is we can reduce the size of the risk. So this one was actually a little bit easier to read when it came to building it in an options strategy graph. So I'll build this out in just a second. Example of what, Sam? You asking for an example of the broken wing or example of the open wing? Let me know. You looking for answer? Are you looking for an open wing example or an example of the broken wing? Let me just. I guess I'll just answer both. I'll do an example of the broken wing. Okay. Let's say that I'm going to go to the SPX next week. Okay. Now, everyone in the chat here, tell me if you think SPX is going to be higher next week or lower next week. Again, no right or wrong answer. I don't care. Just tell me what you think, and I'll build it. Okay. Let me build this over here. Let me switch the screen really quickly. So that way I'm not getting all this funky stuff on the chart. So we have this. Let me change the screen, replace screen sharing with this one. There we go. Okay. So, all right, broken wing. Now, again, everyone's listening. Tell me what direction you think the SPX is going next week. Do you want to be bearish or bullish? Lower. Okay, cool. So we're going to build this lower. So here's what I do for a broken wing next week. Let's say that Monday, if we want to trade like a 1 day, then I mean, again, the market's closed today, so this doesn't really work. But if on Monday I thought, okay, if I give the market the entire week, I'm going to try to create a broken wing butterfly spread that takes advantage of if price falls, I make money. If price falls a lot, I make money. If price falls a little, I make money. If price falls a little, but comes back to kind of break even for the week, I have a potential profit trap. Okay. So so we close today at 62.60. This is perfect. So I'll go to next Friday, the 18th. let's say that we're like, okay, I think that the market is going to be lower for the week. Let's start the trade off around, let's just say 6,300. We're going to say the market won't go up above 6,300. And so I go 6,300 and I'll go, let's go 15 wide here and 5 wide here. Okay. So how did I build that trade? Well, my pin price, let me type this out. My pin price is I'm doing sell 2 calls at 6,300. Okay, so that's my center. This is a buy 1 call at 62.95. And then my risk is this part over here, which is the buy 1 call at 63.15. Okay, so let's break the trade down and show you why it has this type of risk profile. The 62.95 is a buy. The 6,300 is a sell. If I take this together, buy 1 at 62.95, sell 1 at 6,300. That is a bull call spread, right? So that's bullish. So if price is exactly at 6,300, that means I keep $5 on that trade. Okay, cool. That's one portion of the trade. The other part of the trade is I have a sell 1 at 6,300 and I have a buy 1 at 63.15. What is this trade? This is a bear call spread, which is bearish. This is 15 wide and this is 5 wide. So like I said, I have a small debit spread with a wider credit spread. That is how I can make this a credit spread. That's how I can put this trade in, get paid a credit to take the trade. But because my credit spread is wider, that's why I have risk in the trade. Does that make sense? So if I believe that the S&P will not be above 6,300 next week, this is one way to trade it. I can take the trade in for roughly $3.40 credit. I can have a max risk of $15. So my max risk would be here at $15, but I pull in the $5 profit trap and I pull in the $3.40. Okay, so that gives me $8.40. That's why my max profit is $8.40. That's why my max loss would be $6.60 because it's 15 minus 5 minus $3.40. That's how the math works on this. Okay, now you can see that my max profit is $8.40. That's if it's perfectly at the top, pinned at 6,300 by expiration. Very difficult to do. Okay, but my max loss is greater than what I take in on just this credit. So I can take in 340 credit, which is great, but my max risk would still be $6.60. Okay. So is it a great setup? Well, remember, if I'm confident I've got some direction, I think price is going lower, I'm giving myself an opportunity to, one, let price move a little bit higher, but fail, and then still fall and to give me all of this profit. Anything that goes down in price, I'm going to make $3.40. Okay. Anything that goes up, let's say 40 points, right? We closed today at 62.60. If the market goes up 40 points, I still have a profit trap potential by the end of the week. So the market can go up a little bit, maybe even hit all-time highs again, and then fail. And if it does that, I can turn this into profit. So it's a little bit higher risk than reward for just the credit. But if it's spot on at the end of the day or spot on at the end of expiration, there is that potential lottery trade / profit trap. Does that make sense? So that's if I want to say, I'm going to call top next week. Here's how I'm going to do it. That's my trade. Not bad. Okay. Now, for anybody that says, I think the S&P is going to go higher next week. Okay. Let's talk about that. Okay. So what do we do here? Well, if we think it's going to go higher next week, let's say that we're at 62.60 right now. And we just think, you know what? I think it's going to go higher. As long as it doesn't go any lower than today's close. Like today, it's Friday, it closed at 62.60, like 2 points different. So I'm going to make this a put spread, and let me build this out with a put butterfly. So now I say, you know what? I think price will not fall below 6,200. Okay. So I'm going to put that as my pin price, 6,200. As long as we stay above that, I'll try to make some money. I'll have the little 5 wide spread here and then go 15 wide on the other side. So there's my broken wing butterfly spread. Now, again, look at how the trade mechanics set up. My max loss would be 790. My credit that I take in for the trade if I place this on Monday morning would be about $2.10. So I have a bit more risk than reward. If I have the credit trade, I make $210. If I have the risk on the trade where price goes all the way down here, if it gets below 6,200, I might just want to bail on the trade and cut it off. Because if I hold it all the way to expiration, I could potentially lose 790. But if I say, you know what, I think that price is going to break 62, I don't want to flirt with it, I'm just going to get out of the trade, then you can close it for a partial loss. You don't have to hold the trade all the way to expiration. Okay, so you can manage risk a little bit better. But obviously, if price is going to cooperate and it opens next week at 62.60 and it just stays here and goes nowhere, looks good on Monday if price stays the same. Looks good on Tuesday if price stays the same. Looks good on Wednesday if price goes up. Looks better on Thursday if price goes up. I would keep the trade running and give yourself a risk on Friday and see like it's got to come back 100 points to make it a risky trade, and you still have a profit trap at that final day of expiration. So this is what I would consider doing if I wanted to, call the bottom for the week and manage the trade. Does that make sense? So it's a small debit spread with a bigger credit spread. So I'll type this out so you can kind of put it together. If you have to go back and watch this video, I hope you will. If it's like, these are really interesting, I'd like to learn more about this stuff, watch this video again. Because I think the breakdown here, like step by step, here it is. If you did this trade, you would have a sell 2 at 6,200. You have a buy 1. This is a put, by the way. So this would be put. And then you have a buy 1 put at 6,205. And then you have the buy 1 put at 6,185. Again, just an example, right? So I buy 1 put at 6,205. I sell 2 at 6,200. I buy 1 put at 6,185. So it's a 5 wide debit spread and a 15 wide credit spread. That's why I can take the trade as a net credit. So the trade is this. I buy 1 put at 6,205. And then I sell 1 put at 6,200. That is a bear put spread. That's a debit spread. That is bearish. So this is a bearish play. That's a $5 max credit. Combine that with a sell 1 put at 6,200 and a buy 1 put at 6,185. Okay, remember this is a 5 wide spread. This one here is a bullish play. Let me type in this is a bull put spread. This is a credit spread. This is a bullish play. And this is a 15 wide max risk. Okay, so my 15 wide is what's financing the 5 wide debit. That's how I take this trade as a credit. If I'm going to manage the risk, do I really want to lose a max of $15? Well, I mean, again, I've got a profit trap here. My max profit would be the $2.10 plus the $5 trap. So I can make $7.10. My max loss would be $7.90. But the probability trade is I'm either going to make $2.10 or I'm going to risk a portion of $7.90. I don't really want to wait all the way to expiration on this trade. I really don't. So more than likely, this is what I intend to have profit on. And the reason I keep this trade open to expiration is if we're so far above it, the odds of us pulling back for a day and overshooting my expected move is pretty slim. But if I can manage this 210 down to 30 cents or less, 20 cents or less, 10 cents or less, I'll just take the profit. Okay. Before we move on to the next one, the open wing, which is a debit spread, it's kind of an interesting play. Does this make sense? Do you understand? Are you now seeing the combination of why it's a smaller debit spread with a larger credit spread and how you can get the risk graph to look like that? I think it's pretty cool. Okay. All right. Now I want to move on to, oh my gosh, I deleted all my, fudge. I deleted all my information on the charts. Son of a biscuit. Well, it's okay. It's all here on the chart. Open wing butterfly. I should have taken a screenshot. Open wing butterfly. I'll just stick with this. An open wing butterfly is going to be a debit. Okay. So let's, I'm going to move on to another screen here. I'll bring this up in just a second. Let's go. Okay. So this is going to be interesting. If you think that the market is going to go down next week, Sharon says, are volume and open interest at all reliable to help shape? It wouldn't necessarily. I mean, if you're trading an index, Sharon, if you're trading like the SPY, the QQQ, the SPX, like even futures, like futures options, there's plenty of volume, obviously, in those positions, and there's tons of open interest every single day. So if you're trading like very liquid instruments, then you've got gobs and gobs of open interest and lots of volume. Okay. What I'm interested in though is the expected move. That's what I'm interested in. Like I want to see, okay, what's the broker saying is like the guardrails of where price is going to go for the week, right? Or for the day. Price doesn't go too much higher or lower, stay in the guardrails. Price doesn't go too much higher or lower for the week, stay in the guardrails. If the options market does that every single week, which it typically does, then that's what I'd be using primarily. You're going to have tons of volume and liquidity in these trades if you're trading an index or a high volume stock. But the expected move is kind of what I'm going to be after. Okay. All right. Let's switch to the open wing, which is going to make this a debit. But I want to show you the big reason I like the open wing is because we can reduce the size of this loss. That's what intrigued me about the other one. Okay. So for those of you that think, okay, I think that the S&P is going to go higher. I think it's going to go higher. Okay. Then what I'm going to do is craft this trade with all calls. I'll build out a call butterfly. And now I start messing around with the numbers. Now let's see if I can build this out with all calls at 62. Okay. And let's see if I can go 5 by, there we go. Okay. Now, it's kind of like a broken wing, but it just gives you like a weird way of doing it. You, instead of doing like a credit up front, you now just pay a debit up front and it still looks the exact same, right? Like I pay $8 for this trade. I pay $8.10 for the trade, but I'm doing a potential max profit of 15. Okay, because if you break down the trade, I have I've got a buy at 61.85 and a sell at 62. So let me write this one down. This is again, I don't take a lot of these trades, but I think it's interesting that if you're willing to put the money up front, let me see if I can play around with these numbers. So if I go by 90, okay, so that's 10 wide. Let me go a little bit wider here. This is why I like option strat, because you can kind of build it out to see like what it makes this trade worth it, right? If I wanted a bigger profit target, I got to go a little bit wider on the risk here, which I don't love. So what I'm trying to do on an open wing is I want the risk to be kind of manageable, right? Like now I pay $4. I can keep about 85 cents of that, and I have a profit trap here with more than my max risk. This is what's kind of nice about the open wing, is I can potentially craft this trade in such a way that my max profit trap is greater than my overall max risk. That's the only reason I was a little drawn to the open wing, because I'm like, okay, if you can build this out similar to a broken wing with a credit spread, well, I can build this out so I'm going to keep a portion of the trade, but I have a profit trap that potentially pays me more than all of my risk. So if I ever hit, the lottery play here, I can make some bonus bucks here that helps offset any type of max risk I'd ever take. So if I want to see that, hey, I think price is going to go higher, well, I do the trade like so, make sure that I build it in a way that gives me a net profit if price stayed right here for the entire week. Okay, if price stayed right here for the entire week at 62.60, went all the way up to 63 plus, great. At the end of the week, I'm going to keep my little $85. If price comes down and then goes back up for the week, I'm going to keep my $85. If price goes up and then falls all the way down towards the end of the week, I have that potential profit trap. The profit trap is going to be near expiration. So don't think when you take these butterfly spreads that you got a profit trap just because price is in the trap zone. You don't have a trap unless you're pretty much at expiration. That's the one big risk with butterflies is you can take a trade and like day one, it's in the profit trap. You're like, I should be able to close it. Nope, because there's way too much time decay that's needed. Okay. And that's if you're long or short. You still need a lot of time decay because this thing maxes out at expiration. So if you go back here, this is out a week, go to Monday. This thing offers virtually zero profit. Okay. Let's go to Tuesday. Let's go like to closing bell. So let's go Monday closing bell. Monday closing bell here, right? If price goes higher, we get close to profit. That's fine. Because remember, my max profit's $85. I'm getting most of that right here. On Tuesday to closing bell, let's go Tuesday closing bell. Tuesday closing bell, same thing. If price is higher, I'm getting, $60, $70, $80, and my max is 85 on this little credit. If we go to Wednesday, closing bell. Okay, now if price just stays exactly the same, I'm getting about 3/4 of my max credit here. If price is falling, I still have some time. If price is rallying, I'm pretty much at max profit. That's fine. Let's go to Thursday. Thursday closing bell. Okay, if prices stayed sideways the entire week, we're pretty much at our max profit for the credit side, for this little tail. That's not a bad thing. Like you don't have to hold the trade to Friday. If we're going all the way to Friday, as we get towards closing bell, now you start to see that my dead zone, my full max credit here is going to be pretty much achieved with an up move, down move all day Friday. I can take that full 85 cents. If I wanted to let the profit trap run, let's say price started to fall on Friday. Well, price would have to fall about 60 points. And by the end of the day on Friday, watch this at the last little bit. I'm telling you, all the way to expiration. Look at this thing around 3 p.m. So the final hour of your expiration, now you start to see we got some profit trap potential. The final, 30 minutes of trading, now you have some profit trap potential. The final 30 minutes of trading, it just goes straight up. Like it's the curse, and it's like the gift and the curse of the butterfly. You can get paid all of that money, but it's so tricky. It's so difficult to hit that profit target. It is like the last, 30 minutes of trading, the last 20 minutes of trading, the last 10 minutes of trading. It's very, very sensitive. Again, that's like my biggest risk with a butterfly is like, I'm trying not to hold these things all the way to expiration. They're great when you can get them. They're great when you can land a profit trap, but it's not the probability. The probability is craft the trade in a way to give yourself some margin for error and manage the trade. This trade is probably the highest probability of just winning you $85. Easy. Okay, I'll take the trade. So do you want to make more money? Well, sure. Let's go up to 62.05. And now we can make $200. Okay, what if I go up here? I can make $110 and I can risk $390. I still have a $600 profit trap. Well, that makes a little bit more sense. I'm risking, $390 max to make 110, but I also have a profit trap in case price were to fall a little bit. I only move the strikes by $5, right? So a little bit kind of goes a long way. It's like, okay, 62.05, does it stay there for the week? If it goes higher next week, we'll make 110. If you think it can go up a little bit more, then you spend it this way. There. Now I can make 125, still risk max of 375, profit trap of $5. I can make max profit more than my risk. That's why I like to open wing. You can create this trade in such a way that you can turn a max profit that's in this profit trap that is potentially covering your max loss. In a broken wing butterfly, it's tough to do that. In fact, I've never really seen a broken wing butterfly that offers more reward than risk. But in open wing, it does because you're willing to put the money up front in a debit. Okay. All right. And if you think that price is going to go down, then we build this out with a, not calendar, sorry. Let's go to put butterfly. And then we craft the trade this way. We'll go back to 6,300. Okay. We think that price will not go above 6,300. So I put my trap in here, and I put my trap in here. So now I'm 5 wide and 15 wide. Max profit is 835. Max loss is 665. I can keep $335 on the trade. That's not too bad. That shows that there's a little bit of pricing skew in the options chain to have more money riding on this trade here. The nice thing about trading this one for SPX is there's no assignment risk, right? It's cash settled. So if I believe that price will not go above 6,300, this actually offers me a pretty good credit. I can keep $335 if price stays less than 6,300 all week long. I do have a risk here, but I also have that potential lottery pick and that profit play. Make sense? All right. How many people are bleeding from the ears right now? Okay. The intention of this session was to just share some ideas. In truth, I trade a lot of these. Let's go back to the screen here. I trade a lot of these. Let me go replace screen sharing. Go back to this. I primarily focus on standard butterflies and broken wings. But what I'm going to do is consider, if I'm willing to do a broken wing, I'm going to start looking more at the open wing to see, can I manage my debits? Can I manage my max loss to make it a little bit less of a hurt? Because I'm still calling essentially a top or bottom. If I'm doing an open wing, I'm still calling a top or bottom. I want price to go down. I want price to go up. But now I'm just going to look at managing my risk profile. That's the only reason I brought this to the table today. A broken wing I've used for years. I like broken wings a lot, but I've been stung a couple times, especially in a 0-day environment where I called the top for the day and price freaking blows through it. And I lose, $1,000. I'm like, well, that was stupid, right? But if I could have risked maybe $500, I could eat that a little bit differently and, maybe not be mad at myself. Okay. So I understand that if you want to watch this video more than once, it makes sense. It's there. It's trading session or trading 101 strategy session, all about butterflies. It's in the channel. Watch it as many times as you want to. I hope it helps. Okay. If you like this information, and I know this is maybe a bit more advanced, I know this might feel a bit more advanced. Guess what? If you're in any of my services that incorporates any type of butterfly spreads, I give you all the details of all the trades. What's the underlying? What's the expiration? Is it a call? Is it a put? Is it a debit? Is it a credit? If you can follow an option chain, you can find these trades. Okay. And I will manage the trades to the best of my ability, as I always do with all my services. But I like butterfly spreads. And I was a little intrigued to find out, like, this open wing butterfly stuff is pretty interesting because I can manage risk better. And anytime I can find something that helps me manage risk better, I'm interested in learning more about it. So, I pick up something along the way, want to share it with you. I'm happy to do more strategies like this. I do have another, if you go to my YouTube channel, strategy session, let's do this one here. So youtube.com/Chris Pulver. Let me go into my videos. So search my channel, Trading 101. There's a lot of videos on Trading 101. Let me see if I can find some more or trading session. I'll just type in 101. I've got a lot of videos. How many videos total? Probably, I don't know, a bunch on the playlist. So like these are my newer thumbnails. So here's one up, down, sideways. Strategy session, we talked a lot about debit spreads, credit spreads, long calls, long puts. So if you find this thumbnail, Trading 101 strategy session, I will do more of these. I'll do more of these. They'll be recorded and archived. I'll give you some examples. Like I'll explain the strategy. We'll decode it, deconstruct it, make it all make sense, have it there for a full lesson. And then obviously for some of my services, we take the trades live. I like the setup. We take the trade live. So this thumbnail is like certainly more of my newer stuff. And again, I want to be able to teach you every step of the way. If it feels advanced, I get it, but we start somewhere. If we start out with something very basic, this is a great one to start with. This video here, like I said, long calls, long puts, debit spreads, credit spreads, great strategy session for up, down, sideways trading. Learn enough to be dangerous. Learn enough to position your trade to say, look, I think price can go up from here. Here's a couple of strategies. I think price can go down from here. Here's a couple of strategies. I think price is going to go sideways. Here's a couple of strategies. Think about that. If just in a couple of core strategies, you can learn enough to trade the market up, down, sideways, you're pretty effective, right? Because you can make money in any environment. If we're in a broader bull market, take a bunch of bullish strategies. If we're in a broader bear market, take a bunch of bear strategies. If the market is choppy and indecisive, take a bunch of directionally neutral strategies. And guess what you've done? You found a way to trade the market for everything it's given you. In all these different changing environments, low volatility, high volatility, you find a way to trade it. Okay, Carlos says, when you do these, I would like you to give an expectation or target in writing. I mean, okay, so meaning what? This trade that I just outlined here, as long as price stays below 6,300, we make money. So we're trading here at 62.59. We're giving ourselves 40 points of buffer. 40 points of buffer. If price can't break all-time highs next week, this trade would be great. Yes, I pay a debit. Yes, I have some risk, but I also have a pretty good chunk of profit here if price cannot break above 6,300. So the target is, if I took the trade for 665, again, go by day. Let's go Monday closing bell. Okay, if price falls on Monday, we're already going to start to see some profit right away. We can take the profit. Like if I have a max profit of $800 and I'm going to take $150 to $200 out of it, I'll take it. How about Tuesday opening bell? Or I'm sorry, Tuesday closing bell. Right in here. If price is down, we're starting to see profit faster. If price is sideways, we're still fine. We're still making money. We still have prices unthreatened as far as our risk goes. How about Wednesday? Closing bell. Okay, a little bit more into that max profit area on the tail side, and we still have a profit trap if price hasn't gone anywhere. Thursday closing bell, right in here. You can see if price has gone nowhere, if we start the week at 62.60 and we stay there, we're going to be up about $230 out of our $330 some dollars max. Again, not too bad. Eliminate the risk, get out of the trade. If we go all the way towards Friday, now you're going to see, oh my gosh, if we're still trading at 62.50, as long as price doesn't make a wicked run up into these highs, but if it does, there's that potential late Friday profit trap, which is the last 30 minutes of trading, all the way to the close. Do I want to plan on taking my trade all the way to the close? Not really, right? Because if I'm offered $335 without having to worry about the excessive risk beyond, I'd probably just take the profit and be happy. Okay. And so, Carla, to your question, if I ever take a trade in any of my services with a butterfly, there will be a profit target, i.e., I'm going to take a butterfly spread that costs me 50 cents debit. I'm going after a $1 credit. Done. I'm going to take a broke wing butterfly at a $1.50 credit. I'm going to try to manage that $1.50 down to 25 cents or less. Or I'll let it go all the way to expiration and see if we have one, the full credit, or two, a profit trap. Every trade that I take live will be outlined. So there's no guessing. There's no wondering. Everything will be done in the services. Okay. All right. Okay. I'll wrap it up there. That's a solid, hour and 20-minute session. We talked some markets today, grabbed some winners, happy with that. And, this is forever in the archive. So Trading 101, you can check it out on the channel. We'll do more of these strategy sessions. I like them. I can just teach whatever I want. I think if I get more and more followers, more and more members, the education necessary, and again, all this education is also in every one of my classrooms. This isn't like this guy never teaches us anything. I teach all this stuff in my classes. But I also think, you know what, if I could just give you the concept, give you the trade deconstructed, and it starts to make sense, that way coming into a service and seeing that we're going to take a credit spread, we're going to take a debit spread, we're going to take a butterfly spread. It's not over your head because I've taught you it here, I've introduced it here, at least outline the concept. You learn all the details of my master classes. I teach you every step along the way. You can follow the trades exactly to the degree of I took the trade live. Here's all the details. Entry and exit from start to finish. You have that, right? I'm just trying to break down the walls of nothing is too much to learn. I didn't know any of these strategies, right? I didn't know any of these strategies when I first started trading options. All these were foreign to me. But I was willing to put in the time to learn some stuff. I was willing to put in the time to say, there's all sorts of ways I can craft a trade and a trade idea that allows me to express in the market, I want to trade this market bearish right now. I want to trade this market bullish right now, and do that with a risk defined trade. So I learned how to do it through options. That's a lot better than just buying stocks. That's a lot better than trading, leverage instruments like futures where stops get run all the time. And, Forex stops get ran all the time. It's like options is a time and a strike price. That is it, right? So price can do all sorts of stuff going up and down and hitting your levels all over the place, but it doesn't matter until it's time and expiration. So you have this invisible line in the sand that's always going to be a risk. You can never risk more than what the original trade is taken on. So how nice is that, right? If you put on a trade that the market can literally go to zero or it can go to infinity, and my trade is set up from start to finish just like this, I know that I can't risk more than this. Every time I place a trade, this is the most I can lose. Every time I place a trade, this is what I plan to make. Every time I take a trade, this is what I could possibly make. Every single trade, I know exactly what I can make or risk. That makes sense? That's why I love options. That's why I've gravitated my entire portfolio heavily towards trading options. And if anybody tells you that options, they're crazy risky, somebody that trades options is insane. It's so risky. They're not at all risky if you define the risk. Okay. I just talked to a potential client this week that had the same conversation with a financial advisor. Options, impossible. The riskiest thing. You could lose everything. How? This market could go to zero, and I'm only going to risk $665. This market can go to infinity, right? This is what I can risk. This is what I can make. This is what I'm likely going to make. And it's one trade. And I do that thousands of times. That's why I love options. Okay. All right. Got it. All right. Like I said, hope this was fun. Maybe I started, but look, if you remember, if you're in this other strategy session, this was simpler. This was like very basic stuff. Maybe start here. Maybe start here with this trading 101 strategy session. Let me go strategy session, and then see if I can start building these out. So we have this one here. I pull out some shorts and some info. Today's video is going to be the same thing, same thumbnail. So let's work with that. Let's just have more of these sprinkled in, introduce some strategies, deconstruct the trades, let you understand them. All my services will give you full details, master classes, everything you need for that exact strategy in tons of detail, and obviously live trades and examples to go with it. Okay, cool. All right, thanks everybody. Have a great weekend, and talk soon.